Hey everyone, welcome to our expert series. It is Monday, and we kick off Mondays with Greg Dickerson. How you doing, sir?
I'm doing good. Michael, how are you?
I'm doing well. It's we have phase 2 opening in New York. We have the great surge in cases in the South.
Yeah.
We have existing home sales data out in the last hour that show May probably being the bottom. What's caught your attention, and where do you want to start?
Yeah, all that, in the stock market, of course, keeps, on a tear. And so the interesting thing is, yeah, we're opening back up everywhere. New York is open back up for, the first time. So it's going to be really interesting to see what's the results. We already know there are the hot spots, where I don't really look at cases, because the more you test, the more cases you're going to find. And, there's a lot of people that are asymptomatic, but the hospitalizations and obviously the deaths is a thing to watch. And we're starting to see an increase in hospitalizations. So, we'll see what the real impacts are. And there's already countries that are shutting back down. China, South Korea are resurging. They're shutting down in areas. Brazil obviously still has a problem. So from a world global economy perspective, it'll be interesting to see what happens and what the effects are on shutdowns. And I know in this country, I don't think anybody's going to order it, or try to, but I think people will voluntarily do it. Like we've already had in my area, several restaurants that opened, they had some infections, so they closed. So, it's going to be hit and miss for a while here.
Yeah. First and foremost, I do not see the U.S. and frankly, I do not see another states closing down like we did before. I believe there's an appreciation that the Great Shutdown actually causes more harm, right? There's just so much other stuff that happens when you do that. It's kind of two horrible choices. We tried it one way once, and I think we're just starting to pay the ramifications of that. And I don't think anybody has the appetite to try that again. But yeah, there will be locals. For example, Apple is already, I think there'll be companies making choices, right? Apple,
right, that's what I'm saying. Yeah.
Yeah. Apple shut down 6 stores, I think. And a couple of others have said, hey, this or that is going to be shut down. So I do not see states or the U.S. shutting down again. But back to New York, yeah, they just entered phase 2 today. They're estimating that that's going to bring back 300,000 jobs, which is obviously a good thing. So the other thing that it's interesting for New York, I just saw is real estate brokerage was not essential. So they've been shut down for 3 months. It'll be very interesting to see how much, I'm going to guess, price deterioration happens, and probably in the high end, right? All the wealthy have kind of gone to their second homes, and we're going to find out how many of them plan to stay. I think it'll be interesting. So
yeah, there's a lot of people. See, what do you have, 8 million people in New York or something like that? So,
like that,
I don't think there's going to be any kind of a meaningful exodus that's going to put a dent in that. And I think it's only going to be temporary once we get to the other side. We have a short memory in this country. So
sure.
Once you get to the other side of things and you get treatments, vaccines, and all that, New York is New York. It's not going anywhere. San Francisco, the cities are the cities in spite of all of the things that have happened. And that's the one place where, they're not going to get rid of the police force.
Yeah.
Some of these other areas like Seattle, I don't know, what the results are going to be there. But New York, there's going to be police, there's going to be order, there's going to be safety, because, they're not going to let that get out of control.
Yeah. Well, I think there's something I knew I wanted to talk to you about today in New York, because I think there's a lot of there was a lot of new development going on, vertical condos, I guess I'll call them. They might be, I don't know what they're called. Let's call them condos, that are kind of midway through. And I saw just again on CNBC clip this morning, there's one condo tower that I think 12 units were complete, 2 were sold, and 10 were pending, and they're still in their construction loan phase. So
yeah,
that debt is typically short, is my understanding.
And expensive.
And, they're probably going to have a hard time selling those additional 10 units, at least in the short term. I mean, how does debt like that get reworked? I mean, let's assume it doesn't sell till next year. I mean, what happens?
So it just, in this economy, usually you can get extensions, but let's say we start running out of time and the banks are not willing to extend, then you got to go to another bank. And if they're not willing to extend, then you're in a workout situation.
Yeah.
Last thing these banks want is bad loans. So they're going to be incentivized to extend but they're going to pressure, you or the developer, as much as they possibly can. But these developers are sophisticated. They know what the banks can do and can't do and will do and won't do and where they want to go and where they don't. So it'll be a workout situation. And especially given the environment right now, it's in everybody's best interest to extend, but it is generally more expensive. You're going to pay a premium.
Yeah.
But I think they'll work it out, work it through to a point. And then, once you get stabilized and you're back to, certain times in the economy again, then, the clock is going to be ticking and running out. But
yeah,
nobody's going to foreclose on anybody right now, as long as you're making payments.
Yeah. So do you think, and again, if you may not know the market in any detail, that's totally fine, but isn't there cycles where there's overbuilding and then there's pretty hard price deterioration? Because, I guess I don't have the same rosy picture of New York that you do. I think New York sees a 10 or 15% price hit, in the next 12 months.
Yeah, I mean, if you look at it, depends. There's so many different sectors of that market. So, office, retail, residential, and a lot of it's mixed. So in that scenario, so let's say the developer can't make the payments. Okay, so he's not selling, can't make the payments. So the bank's going to force you to sell.
Yeah.
So then the question is going to be, how much are they going to take?
Got it.
So, and what is your loan balance? So you might see stuff trading at 50 cents, below market value here and there. So the overall market in general, it's a relative thing. So it's going to be asset per asset, case by case. Okay. There's a big project right now called Hudson Yards. It's the largest project ever in the country.
Oh, wow.
This thing was huge undertaking, $3.7 billion project.
Oh, wow.
In New York called Hudson Yards, and it's sucking wind right now. I mean, it's like a city that was developed within the city, and it's sitting there pretty much empty.
Oh, wow.
Yeah. I mean, it's got its own, rail stop and everything. And it's, when you look that up, it'll give you an idea of what you're talking about. And
I'm going to look that up.
What's happening and what can really affect values in New York real estate, and there's been a couple of buildings, Green is one of the largest owners there. And they had $400 or $500 billion building that they were selling, or, I can't remember what the numbers were that fell through. It was huge. It might've been 800 million. I can't remember if it was million or billion, but there was a huge deal that fell through on a building that they were selling, back in March. So it's interesting times in New York real estate, but, it's always done that, right? Back in September, 2001, after the attacks, there were some issues, this markets are always like this. So it is supply and demand, although, there will reach a point to where, you're just not going to fill space. You can overbuild to the point where you just don't have anybody else moving in.
Yeah. The thing about New York and San Francisco, and again, I only can speak to San Francisco with any detail, right? That's within a 45-minute drive for me, is there's really no reason to live there if your employer is telling you can work from home, right? San Francisco in general, right? Vertical living is not, it's not family friendly, right? There's a homeless problem that's getting worse.
Yeah.
I mean, San Francisco is not a very enjoyable place to live for most people, right? There's some pockets of San Francisco which are beautiful. But when you talk about San Francisco in general, man, there's just not a lot of reason to live there if your employer says you can live from it or you can work from anywhere.
Yeah. And I've seen the stories, the 60 Minutes and stuff, and just, the laws in San Francisco now, where they're not even really arresting anybody for anything.
They're not arresting people.
Yeah. You have people, homeless people camping out on the streets in front of $1 million houses, like defecating right there on the streets. The people can't do anything about it. So yeah, you're right. And look at Seattle, with what's going on in Seattle. And, I've talked to a number of people in New York recently that, are in Florida and other areas. And I've asked them, I'm like, well, are you going to leave? And they said, we live in New York because we pay the premium to live in New York because of the entertainment and being able to, get out and do things. And they're like, we can't do that the way it was, then there's really no point in living there.
That's exactly
we might as well go live somewhere else and, reduce our living expenses and, be able to get out and enjoy ourselves. So, city life as we know it, not only from the virus and, the operations and all that, has fundamentally changed and will be changed for a while moving forward, even getting out to theater and all that.
Yeah.
With limitations on occupancies, but your safety with what's going on now with, the anti-policing movement. Safety is a big issue right now in a lot of areas, especially Seattle, because they're just like, hey, you don't want us, you're on your own, you know?
Yeah, that six square block autonomous zone, I think they're calling it.
Yeah.
Yeah, I was talking with a Seattle policeman Saturday, I think. Yeah, I think it was Saturday. And he's like, dude, we're not going there. Right? They want that. It's theirs. And
Right.
sure enough, over the weekend, typically what he's saying is during the day, it's all kumbaya and people are loving each other. But at night, crime happens. Burglaries, assault. There was a murder Saturday or Sunday. It's going to get out of hand. And
yeah, we know what lawless, society looks like. And, so what are we all going to strap guns on and start carrying guns now? And I get it. I mean, there's fundamental issues within police departments all over the country. There's corruption, there's, brutality, there's racism, there's all kinds of stuff going on, abuse of power that needs to be fixed, and police,
no question.
Officials need to be held accountable, and there's a brotherhood within there that people don't want to tell on each other, and they cover each other up and all that kind of stuff. So that needs to be fixed. But man, you can't just get rid of the police.
I agree with that. Yeah.
And I know if my city were like Seattle, I'd be gone. I would not be here.
Yeah, no, believe me, if I was anywhere close to that, we would have gone somewhere else. There's no question.
Yeah, and I won't live in San Francisco. I won't live. I just won't do it. And that's me.
Yeah.
Some people, they don't care. But
yeah. And again, back to New York. Yeah, the thing that's going to be interesting to me is when does the city become the city again? Right, 24-hour nightlife, the Broadway shows, the restaurants, entertainment. I mean, that could be next year. Easily.
Yeah, the great experiment continues. So again, we don't have a vaccine, we don't have a treatment, we don't know how serious this. We're still in phase 1. Larry Kudlow came out and said there's not going to be a phase 2.
I saw that.
So I mean, you can't expect to open back up and just let everybody do whatever and nothing happens. I mean,
good old Larry Kudlow. He's an economics guy. You got to get health information from Larry Kudlow. I know.
Yeah.
That's not where I get my health information.
So we're going to see. So everybody said, hey, the shutdown was worse than the outcome of not shutting down. So we're getting ready to find out,
I agree. So let's talk about the South, because I think that is, up until this point, this, Texas to Florida, right, has generally been okay. And now almost daily, even all the way out to Arizona and Southern California, frankly, it's all the Southern kind of the South U.S. Record numbers. And most of that's because you're just testing more. So you're absolutely right.
So I don't even look at that. I mean, that's like reporting the daily cold, virus, you know what I mean? So what you look at is hospitalizations and deaths. And, we're seeing hospitalizations on the rise.
Yeah.
Starting to surge. So, we just have to see what the results are. Hopefully it won't get out of hand. Hopefully it won't be anything like it was, but you gotta be expecting it to be. There's no reason why it can't or shouldn't be, other than the fact that it seems like a lot of the cases are with the younger people.
Yeah, that's a twist.
The protests and getting out and being social, because they're the ones that are less, worried about it and aren't worried about social distancing and things versus.
Well, the message up until this point's been that group is fine. I mean, when you think about the message they've been told for the last 90 days is if you're not 60 years old, you're okay. I mean, essentially. What do you think is going to happen? Yeah. So then let's talk about I don't know if you saw it this morning, but I'll give you the details. So existing home sales, so residential, came out today for May, which I think is going to be the bottom, but they were down 8.9%, or no, 9.7%, 25% year on year. And, oh, by the way, inventory is down 18.8%. I mean, these are just, it's crazy out there.
Mm-hmm. Yeah. And, a lot of the houses, as we've been talking about, were pulled off the market. Inventory levels are record low everywhere. So, what's really driving that? Is it, people aren't, moving for jobs. People just don't want people coming through the house. It's really, I want to know, why aren't people, why aren't we selling? What's going on? And I think people are just, some of it's money. There was an article that came out over the weekend, I think it was, that, a lot of people are, a lot of people are looking at having to sell their houses to generate money because of the coronavirus and all that. They're worried about having cash. So it's going to be really interesting to see where this thing goes. But, I think it's just that stalemate of just shutting down, people just not wanting to move right now, not having to move right now. And, it's definitely a seller's market. So it's interesting.
Yeah, for me, it's all about listings. That's what I've been talking about for the last couple of weeks. I mean, I got that call two Sundays ago, record low inventory. and we came into this at record low inventory and it went down 20 to 30% based on where you were. So I just don't know what's going to get that going again, right? Because I think there are two markets. I think there's the jumbo market, which is slower, and then there's the below jumbo market, first-time buyers. So it'll be interesting. And then tomorrow we get new construction sales.
Yeah.
And I'm expecting that to be up.
Yeah, because starts are up, so yeah, you would, because those are the ones that have been on the market. They have been, they've been moving forward. They haven't missed a beat. Interest rates. I mean, interest rates are below 3 now.
Below 3. Did you see all that? Yeah.
Yeah. So we have all the conditions where there should be just buyers flooding the market. And I don't think that's the case. I don't think there's like a super supply of buyers, even though we have a record low inventory. I think it's kind of, working itself out.
Yeah, I think again, I talk to lots of agents on this channel, and most of them are telling me if they get anything that's reasonably priced and in good condition that will qualify FHA, multiple offers.
Yeah.
The last 2 or 3 weeks, all I've heard is multiple offers, bidding wars, like bidding wars like never seen before.
Well, it was like that, January, February. It was like that before the virus, I mean, we've been in that mode for the last year, really.
Yeah, maybe it's just agents reacting to the recent news, but they're telling me they've never seen it before. And some of these agents go back with me back to the, pre-crisis, pre-06 crisis. So it's 20 years together, and they're like, this is crazy. And I think it's because they have no inventory.
Right. That's what it is.
Yeah, they used to carry, dozens of listings, and now they have 3. So that's probably what's going on, is they're just reacting to a partial data set.
Yeah.
But yeah, I mean,
and it's interesting, and builders can't build fast enough, because it takes time to deliver lots, to deliver houses. You don't have enough labor, the supply chain is constricted. So, we can't get enough supply out there from a new construction standpoint. So it's an interesting time. I mean, it's a great time to be a seller. It's a tricky time to be a developer. Okay. Very tricky because, this thing
you're out.
Switch.
Yeah.
It could switch at any minute. And like you're talking about, New York real estate. So it's all supply and demand, and you can, and we will oversupply the market.
Yep.
And then, then developers just won't move forward because there's no buyers, the banks aren't going to lend because, they're monitoring inventory and all that. So at some point that balances out, and that will happen. But in the housing market, in most areas, it's, we're not there, we're not there.
So let's talk about, because we're obviously in very different businesses, in my market, it's, I went from writing like 3 or 4 weeks ago, I was getting excited, right? Writing 10 to 15 offers a week, getting ready to find the deals. Now with, realizing that listings are down and demand stayed constant, but with less listings, it's more competition. I'm like, I'm out. I'm not going to, get in these bidding wars. So what are you seeing in your market? Are you getting excited, or are you finding cracks where there's opportunity to at least look at deals today?
No, not yet. I mean, they're still trading where they were. We've seen a little bit of, in the big multifamily, we've seen a little bit of concession here or there, for, because that mortgage market is still, very fractured. It's still, there's still not a lot of money out there for multifamily. Freddie and Fannie are the only game in town. If you're developing, HUD's the only game in town, really, for those construction loans. So that's still trickling along and still hasn't recovered, so that's changed the metrics on some deals. But for the most part, the sellers are just like the housing market. They're like, I'll just wait, no point in selling now for less than I could get when, everything is running full cycle. It's interesting. Out of the offers that you wrote, did you get any accepted?
No, I got nothing accepted. I got about 10 or 15% counters. Most of the counters were thousands of dollars, and I wanted tens of thousands.
Yeah.
But no, I was starting to write just to establish price points, right? Because like my multifamily, we're in this chasm, right? Sellers remember yesterday and buyers want tomorrow. So I was trying to establish tomorrow pricing. But then out of nowhere, just listings fell off and demand went. I mean, demand is up. If it's a clean property, I can't compete with FHI buyers. There was a house, the house, the best example I have is there was a house I was looking at, just a nothing 3-bedroom, 1-bath that would rent for about $1,000 to $1,100. Was listed for $199. It would make sense for me, $159, $165, somewhere in there. Yeah. It sold for $219. I went 10% over. I don't know if it'll praise. Yeah. But I mean, that's what's happening over and over. And that's why I'm out. I'll wait.
Yeah. You're not going to, I mean, you always, when you say that, I know what you mean. If something comes along, if it's a deal, you're going to buy it. But as far as like constantly pursuing, it's kind of futile at this point. with the inventory levels we're at. It just doesn't make any sense. So you got to be off market, going direct to seller,
off market, yeah.
And ramp that up. But those sellers know too. The realtors are calling them, so they're not.
Yeah.
They're educated. They know what's going on. What's interesting is that value play is at the very local housing market level all the way up to the institutional level. So the institutional guys, Blackstone, Cadre, JP Morgan, Goldman Sachs, all these guys that have their real estate opportunistic funds, these are REITs. They're looking at going in and buying chunks of distressed owners.
Right.
So, they've got $100 billion that they're setting aside and they're earmarking to go into a REIT that is struggling and to buy a piece of them and stabilize it. So, so it's really interesting how everybody's looking for that distressed play in real estate right now. And it's just not there yet,
Yeah.
Even at the very high levels with mall owners and all that. I mean, they're still not yet. They're not quite there yet.
Yeah, I do think this again. I think we've talked about this a month ago or so. I think when this is behind us, this opportunity will have been more in the commercial segment than residential. I think there's such a memory from banks about what happened to residential last time that they're doing everything they can to make sure that doesn't repeat itself.
Yeah,
and then thus the opportunity is going to be in distressed commercial stuff is what I think.
Yeah. And, multifamily market's healthy. That surprised everybody, at all levels, the, occupancies and collections all stayed consistent and stable, throughout this whole thing. So again, the government stepping in and providing, that extra support with unemployment insurance and all that helped out a lot. The interesting thing, so the housing market and the multifamily residential is doing well. But when you go into the cities, like New York's residential, high-rise residential market and, mid-rise residential market is suffering. I mean, they're off 60 to 80%.
Oh, 80% I saw just over the weekend. Yeah, it's crazy. So I guess when we kind of wrap this up, when we look at, the next couple of months, is it more just watching and learning and looking for fractures? I guess one question I want to ask you is the Fed has come in a way that I've never seen before, right? Not only they were buying ETFs, they were basically the window was open to buy mortgage-backed securities like never before, but now they're going to come out and issue debt to companies. I'm like, I mean, they're just, where did the capitalist system go, right? They're lending to anybody, it seems like.
Except you and me. So
yeah, exactly. Except you and me.
Yeah. So it's all institutional, and the Treasury Secretary is a Goldman Sachs guy, right? Chairman Powell's an investment banker, right? So, these guys are Wall Street guys. So they're hooking up their buddies, number one. Number two, this is the interesting thing. So what they're doing is they're coming in and buying these things, okay? These bonds, these bonds, these corporate, debt notes. They're buying stocks, ETFs, oil, all these things that they're buying up is putting money in the hands of investors that are going out and redeploying the capital. So what you have now is you have a buying frenzy that's going on and an investment frenzy that's going on that, okay, let's put this in the context of the average investor out there, okay? So let's say that all these housing, houses that are on the market, you and me could be the highest bidder and we could pay whatever because we know we could turn around and liquidate that with the Fed at any price and they don't care if they make money or not.
Yeah.
We can turn around and sell that note. So we can go out and buy that. We can turn around and sell that note to the Fed at zero interest for any price. They don't care.
Wow.
So that's what's going on. The Fed is buying these things without any expectation of a profit. And more importantly, if it goes bankrupt and the company goes out of business because they're providing liquidity to default companies, zombie companies, that are already, their earnings are less than their debt, and they're coming in and backstopping these guys. So they know these companies are going to fail. They don't care.
Yeah. Yeah. So any thoughts on what the ramifications of this could be? Because this, the great experiment, whatever you want to call it, there will be unintended consequences somewhere.
Yeah, it's going to stop. So once the economy stabilizes, the Fed's going to stop because there's not going to be any political appetite for that. So it's going to unwind at some point. So right now everybody's fat and happy and, everybody's doing really well. But, the cruise lines, the airlines, the hotel industry, there's damage there that has to unwind. And the Fed loaning money is not going to do any good over the long haul. It's only a short-term prop, that's stimulating the institutional level of investments right now and inflating the stock market. So it's overinflated, non-valuation based, inflation of those assets that has to unwind when the Fed stops. When they stop buying, it's going to unwind, and that's when everybody's going to get caught with their pants down in terms of the retail investor. That's what they're not watching, and they don't really understand. All they're looking at is, man, I bought this cruise line at $5, just like I did back in, when was it, 09, when I bought at the bottom, and I sold on the way back up. The problem is they're staying in there now, and they're thinking it's going to keep going and going and going.
Yeah.
So, a lot of those guys are going to get caught, like the trader guy that was, talking about Warren Buffett. Here's a guy that made, a couple $100,000 or something. And, Warren Buffett's made how many hundreds of billions of dollars? The fact that anybody even gave that guy airtime is just laughable, right?
Oh, he's getting a ton of airtime now. So first off, he sold Penn Game or Penn something. So he's basically been a gambler his whole life. And now he's taken, a big stack of paper, right? Tens of millions of dollars, because he made 300 selling his company.
Yeah.
And Barstool Sports or something. Basically, he's betting on stocks because he can't gamble on sports anymore.
Yeah, they all are.
It's crazy.
Yeah. So they're all in Robinhood, and they're doing that. Now, I don't think that's moving the market in any meaningful way, but
it's moving some stocks.
Maybe a few little ones here or there, but they're not. I don't know how much that of the market that is, but yeah, they're doing well, and they're doing the whole trade thing. But that's not going to end well for those guys if they don't get out at the right time.
No, yeah, that I actually did a video on that. The whole insulting of Warren Buffett. that article was. I came out and said we just saw the top of the market because that was Wednesday before the Thursday crash a couple weeks ago.
I mean, this guy's trying to move markets, right? So it's just publicity. It's just getting views. And, if he comes out and says stuff like that, then people think that, they'll start listening to him. So he can say, hey, I'm doing this with this stock. And then,
Yeah, he's front running. Yeah.
Yeah.
Exactly.
Who knows? But, that's just silly. Warren Buffett, I mean, you just,
Yeah. Yeah. I think it's clear that Warren Buffett probably sold airlines near the bottom. Right?
Yeah.
Yeah, so that's a fair assessment, I think.
But and he's not a trader,
No, he's not a trader. Exactly. Yeah. Not a trader. Yeah.
Yeah, that's not his business. So,
so
I think his investors are very happy and satisfied.
Yeah, most of them. Yeah, exactly. So as we kind of wrap this up for the week, what are you thinking, and what are you looking at for the next 7 days? Anything?
Yeah, I don't know, man. It's it's interesting. So I'm watching, how opening up, affects things. What's the real effect on that? Where are we going from here? And what's the outlook on who can stay open and where moving forward? Because right now it is hotspots, which is how we started, right? So Kudlow's whole thing was, it's just hotspots, it's just isolated. That's how this whole thing started. It was just New York, it was just here, it was just there.
That's true.
And then as people move about the country, it just gets back out again. So I think we're back where we were in late February, early March. In terms of what's going on,
Could be, it could just be
with the surge. So, we'll see. I don't know, man. I have no clue. I just don't know what this is going to do. If it's if it's as serious as it was, if it's as deadly as it was. I mean, you would think it has to be. And other countries like Brazil and these other areas, I mean, it's pretty bad. It's worse than New York.
Brazil is scary. Brazil's pretty scary, right?
I mean, that was New York. Had they not shut down, I mean, that was New York. You'd have had bodies laying in the streets.
Yeah, this is not over, is I guess my takeaway from that.
It's not. And then you have the whole social issues and all that keeps happening. So with that caveat in there, nothing is over. And, it's very interesting times. I mean, it's like I was driving down the road the other day and just thinking about stuff. And it's like, man, it's like we're in a movie, I mean, it just doesn't seem real some days.
Yeah, I agree with that. Well, Greg, this has been fun. I appreciate your time as always. Thank you very much and have a wonderful week.
Yep. You too, Michael.
Thanks.